and welcome to this week's LOLC Securities Weekly Market Roundup. I am Megara Vijaymanna.
And I am Tharidu Amarasekara. This is the sound of profitability.
Sri Lanka's official remittances rose by 31.1% to $751.1 million in January 2026 as the rising trend continued from last year. Official data indicates higher worker remittances come after a higher number of the island nation's labor force left the country searching for foreign jobs amid Sri Lanka's recovery from an unprecedented 2022 economic crisis. Worker remittances are the top foreign exchange revenue earners for the island nation, which is still recovering from an unprecedented economic crisis which hit in 2022. The remittances have risen continuously after the central bank gave up a parallel exchange rate regime, which compelled most expatriates to switch back from informal undial and hawala money transfer methods.
The Cabinet of Ministers approved recently the presenting of the amended Colombo Port City Development Control Regulations to the Parliament. Cabinet spokesman and Minister Dr. Nalindra Jayatissa said the revised regulations are intended to better align development controls with evolving planning requirements and investment expectations within the port city while maintaining regulatory clarity and consistency. These latest amendments focus on key planning and development parameters, including adjustments to land areas initially encompassing coastal zones, revisions to the maximum permissible height and vertical development limits, and refinements to the categorization matrix governing permitted land use.
And now it's time for the corporate highlights.
Sri Lanka's Mercantile Investment and Finance plans to raise 1.1 billion rupees in a rights issue where one new ordinary share will be issued for every 18 shares held. The funds are to be used to strengthen the capital base and to enhance capital adequacy ratios of the company in line with the projected business expansion growth and thereby to be compliant with regulatory capital requirements, the company said. The issue has received central bank approval and is pending CSE and shareholder approval. Diversified conglomerate Sunshine Holdings plc recorded a 48.9 billion consolidated revenue for the 3 quarters ending 31st December 2025, showing an overall increase of 8.1%. The period unfolded in a more demanding operating environment shaped by sector-specific challenges and external disruptions, with the group maintaining focus on disciplined execution of strategic priorities while counting selective reinvestment to strengthen long-term growth platforms. Healthcare remains the largest revenue contributor, accounting for 55.4% of group revenue, followed by consumer brands at 29.7% and agribusiness at 14.9%. Group earnings before interest and tax increased marginally by 1.2% year-on-year to Rs 7.5 billion, supported by improved operating performance in agribusiness and consumer brands, which partly offset margin pressure in healthcare. Profit after tax contracted 8.8% year-on-year to 4.3 billion, driven primarily by lower profitability in the healthcare sector.
Seni Business Solutions plc announced its financial results for the third quarter of the financial year 2026 with a transformative period as a company as they achieved profitability and surpassed the $5 million exit annualized revenue recurring milestone. The total revenue for the quarter reached 547.6 million rupees, reflecting year-over-year growth of 27% in LKR terms and 23% in USD constant currency terms. The People's HR Cloud segment continued to drive robust performance, recording a strong 48% year-over-year increase in LKR terms and 42% in USD constant currency. Subscription revenues comprised 86% of the segment, reflecting the strength of the company's recurring revenue model. Recurring revenues contributed 73% of total revenue, reinforcing the quality and sustainability of the company's revenue base.
Here's Megara with the international highlight of the week.
Thousands of farmers across India are set to gather to protest against the long-awaited deal with United States. According to organizers, this trade agreement could pave the way for imports that could hurt domestic agriculture. The rallies underscore the challenge faced by Prime Minister Narendra Modi as he seeks to slash punitive US tariffs while still shielding India's rural economy. Protesters, including farmers and rural workers, chanted slogans against Modi and US President Donald Trump and voiced opposition to other rural policies, including employment initiatives and proposed legislation on seeds and electricity. India's tens of millions of small farmers are a vital political constituency in the world's most populous nation, and any threat of sustained nationwide protest evokes memories of 2020 and 2021 when growers paralyzed the capital and mounted Modi's most significant challenge in over a decade at the Hill.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intent. We will see you in a brand new week.